Keynes to actually say that this was an important book. People paid attention to it, but you're right, it added to the frenzy that built up to 1929.
Well, that is true, because you can get, old boss Ben Graham told me very early on, you get more trouble with a good idea than a bad idea, because the good idea works. I mean, it's a good idea to buy a home, for example, and then people go crazy. The good idea works, and it works, and it works. Stocks work out better than bonds most of the time. And after a while, people forget that there were some other limiting conditions. With Edgar Lawrence Smith's book, it was that when bonds yield the same as stocks, which was the case then, that stocks are going to outperform because they have this retained earnings. So stocks started going up in the 20s, and all of a sudden they were selling at 5 or 6 times the prices as when he bought the book. And the original correct perception on his part had experienced changing conditions, but people just looked. They got their confirmation through stock prices, and that's what happens in bull markets. People start out thinking stocks are cheap, and then they start thinking stocks have gone up. and a stock can be a good buy or a bad buy. A bond can be a good buy or a bad buy. It depends on price.
But that leads us to today. I mean, if his premise was that stocks are always going to be a better investment than bonds, that's kind of what you hear today, which we've been hearing for a while, is Tina, there is no alternative, right? You have to buy stocks because bond yields are so low, because interest rates are so low.
Well, if you look at the present situation, we've talked about this before, that you get more for your money in stocks than bonds. That doesn't have to be the case. I mean, but it's usually been the case in America, very usually been the case. And if you buy a 30-year bond today with a yield 2%, you're paying 50 times earnings for an investment where the earnings can't go up for 30 years. Now, if somebody said, I want to sell you a stock that's at 50 times earnings and the earnings can't go up for 30 years, you'd say that doesn't sound very good. Stocks are way better than 30-year bonds. I mean, that's clear. And that's one of the alternatives people have. People really have 3 basic alternatives: short-term cash, which is an option of doing something later on; long-term bonds, or long-term stocks. And stocks are cheaper than bonds.